What are the challenges facing community banking today? Have you ever wondered what hurdles community banks face in today's fast-paced financial world? Community banking plays a vital role in local economies, but it is not without its challenges. Let's break down some of the key issues these banks encounter today. First, economic vulnerability is a major concern. Community banks often focus their loans and deposits in specific areas. This means they can be hit hard by local economic downturns. If a community faces a recession, these banks may struggle more than larger institutions that can spread their risk across different regions. Next, we have the limited capital base. Community banks usually have smaller capital reserves compared to national banks. This makes it tough for them to absorb financial shocks. When economic stress hits, their ability to lend can be severely impacted. Regulatory compliance is another significant challenge. Community banks must meet increasing regulatory requirements. While these rules are meant to ensure safety in the financial system, they can create a heavy burden. Smaller banks may not have the resources to manage compliance efficiently, which can strain their operations. Competition is fierce in the banking sector. Community banks are not just competing with large national banks, they are also up against other community banks. With so many options available, customer loyalty is declining. This shift challenges the traditional relationship-based model that community banks have relied on for years. Technological challenges are also present. Many community banks lack the resources to invest in advanced technology. This can limit their ability to offer competitive digital services. Additionally, they may face increased risks related to cybersecurity, which is essential for retaining customers. From an anthropological perspective, community banks serve a social role in their communities. They build trust and support local businesses. However, if their financial viability is threatened, these social bonds can weaken. This can affect community cohesion and local empowerment. Lastly, lending to informationally opaque borrowers presents its own set of challenges. Community banks often lend to local entrepreneurs and small businesses that may not fit the standard credit criteria of larger banks. They rely on personal relationships to make lending decisions, but this practice can be risky, especially under tighter regulations. To tackle these challenges, community banks can balance traditional banking with strategic technology adoption. Advocating for regulatory frameworks that consider the unique role of community banks can help reduce compliance costs. By strengthening community engagement and focusing on personalized service, they can maintain their social role and competitive edge. In summary, community banks face various challenges, including economic vulnerability, limited resources, regulatory burdens, competition, technological issues, and the need to maintain their social role. Finding ways to adapt while keeping close ties to their communities is essential for their ongoing success and contribution to local development.